Good morning, everybody. It's Chris from Serene Education with the 4 majors and update for the 13th of September 2013. Going to be looking at the 4 majors this morning, starting with the euro against US dollar on our FX rate ultimate template. Let's have a look and see how this week has panned out and what we have in store for the end of week Friday. So currently you can see that yesterday, Thursday and Wednesday in particular, euro against US dollar had rallied into the weekly fib, and subsequently we saw Wednesday being a bit of a resistance level, and we saw the outcome on Thursday exactly that. We saw a lot of negativity intraday to start with. However, by the end of play we saw price reattempting that current high, weekly high at the 23.6. So clearly 2 days of resistance levels at this level, and you can see on the Asian session that price has actually pulled back. So if this remains the fact, clearly the resistance here at the 23.6, you can see it's trading below the 23.6 on the daily fib, which is my current low to my current high on my daily chart, from my lows in July to my current high in August. You can see that the 23.6 is where price is trading below as well. So we both have the daily and the weekly fib above price. So this, if this is to be negative sentiment intraday, then we would like to see the 23.6 on the daily, this near-term one, being our resistance level. Ultimately, the weekly high would be our resistance, and we would then look to see if price would actually fall to the downside. On our candlesticks, if you look at the whole makeup over here, you can see quite clearly that the candles are blue, that we had a blue arrow, and price has just recently bounced on the institution moving average, which happened to be the 50% retracement. So price moved higher, pulled back 50%, and now we've seen a further high. The overall sentiment on our indicator box is not forthcoming. We know that we're in a bull trend long term, and you can see that the monthly, weekly, and daily has been showing us that. However, our intermediate trend analysis intraday is giving us a clear sign of indecision, and we're seeing a lot of indecision on our 30-minute and hourly, and a speckle on our 4-hour, and the R squared is complementing any of that sentiment intraday. So if we drop down to a 4-hour time frame, I'll just bring it up to the side here, you can quite clearly see that resistance level over the past couple of days at 23.6, and also what it also constitutes to the institution moving average. We had been trading below the institution moving average on our 4-hour, and then we had the breakout and we went straight into the weekly fib, and now we've had the pullback. So now what we want to see effectively is, if this is to be a genuine breakout of the institution, which is a good sign, we want to see the daily fib, the 23.6 here, which marries with the institution moving average. That is our support, and you can see price at the moment now on our 4-hour is clearly trading below that. So if she closes lower than that, that's going to be a negative signal, because she's actually broken this current support level here before we head into the weekly fib. The RMO is still, however, above the 0 line, but our MACD quite clearly, as you can quite clearly see, price moved higher, and the MACD histogram has actually moved lower. So as we moved higher, you can see that there's clearly divergence here, and what's happened now is we've clearly seen a resistance level here at the 23.6, and price has now fallen back. It is imperative this is to be positive sentiment for the euro, i.e. this move to the upside on our intermediate trend here. You can quite clearly see swing high, swing high, swing high, swing high, break. This break, and we get a bearish engulfing candle close lower, is now constituting to a pullback at a major resistance level. And what we should be looking for though intraday is obviously the next level here would be our 38.2 level. This current consolidation area here would be our next target for the foreseeable future, and then a break of that would we see price moving back to these current lows at the bottom. So imperative, if this to be positive upside, we do need to see this institution moving average on our 4-hour, as well as a weekly fib level of being breached as soon as possible. Failure to do so, the sentiment starts to look negative, and then it'll drag price to the lows. Sterling, here we go on the daily, very, very important one. Just recently we had a lot of positive news for sterling, and we had a nice breakout. Prior resistance level here through mid-June, we failed, and that was above the institution moving average, but we failed to actually find support and kick on and reattempt the weekly highs before a breakout, and price really fell with a lot of momentum to the downside. However, pulled back, and now we've seen price rally just recently, forming swing highs, swing high, swing high, perfect. But the most important thing here, through the latter part of July, breaking up out of the institution moving average, which this is the only second time this year we've done it, but in this case actually finding a support and forming a nice morning star formation, bearish, indecision, bullish, engulfing this three candlestick pattern here was a nice morning star, and price built on that, breaking above the weekly and moving higher to the prior highs, then pulling back, taking profit, failing to do so here, support, breaking out, pull back, and then continuation back to the prior lows. However, the trend line support moving it higher yet again, and sterling having a real go at the weekly on either case, and just recently the most important one on here on the Wednesday, we had a nice breakout of that major resistance level that we had a failure back in June. So this is positive. Now, as long as and I mentioned yesterday, as long as it stays above the 61.8 weekly level here at 1578 and change, this will become our new support. Prior resistance, new support. If we're moving high, any breakouts will be should now become new support where it was prior resistance. So our intraday, we want the 4 hour in particular now to support price. You can see price has pulled back aggressively. A lot of resistance on the 4 hour here after the breakout. However, it's still above the weekly high. Notice on this time frame, the 4 hour, you can see a very sharp move to the upside, swing high, swing high, swing high, swing high. The swing now, price is trading, but it's still above that weekly high. So it's the overall sentiment is still positive. The candlesticks are still blue. We have a red arrow on that, but the candlesticks are still blue. And I presume and I take it that if price actually stays above the 61.8, the candles will remain blue. The moment it gets below that, then you'll probably see the candles getting red again, and then we should be targeting back to our current lows. The overall sentiment here on the indicator box is very much positive. The R squared is on most of the time frames positive. The shorter term time frames is negative, primarily because it's consolidative, but you can see that the RMO is very much positive, and we've seen a lot more green on our MACD than we have seen red. We are seeing red at the moment now because of the pullback, but that pullback, as I mentioned, is still above the weekly fib. And as long as it maintains above the weekly fib, it is still positive. So we're looking for buying opportunities over here, guys. Looking to see a nice bullish engulfing candle move higher on to give us a nice indication of upside. The only thing that's going to cancel this sentiment is if we see a physical daily close lower than the 61.8. So end of week, we're going to see a bit of profit taking. So we could see price consolidating even more. However, we do have a lot of news out today for the US market. If that US market news comes out and it's negative, you're going to see sterling rally on that. However, if the market news comes out and it's positive for the US market, then you are likely to see further pullbacks, and we could see a reattempt or break of the 61.8 on this particular pair. US dollar Swiss franc. Now again, we have been on the longer term trend is very much negative. We have swing lows. However, we have seen a nice strong support recently. Price has tried on a number of occasions to try and break the support level here once we broke below the weekly. That's failed to happen, and subsequently in this support level over here, you can quite clearly see we saw a lot of buying sentiment, a lot more green than red, because if this was genuine to be negative, then we wanted to see the MACD, the SMA level being below. That was currently not the favor. You can quite clearly see here green. And then what we had recently was a resistance level on 2 occasions on our daily, which happened to be below the monthly fib, and the institution rallied resistance, and we saw selling after that. Rallied, breakout, pullback, and what failed to happen over here was the pullback did not close above the monthly, as well as monthly in particular, so we didn't see that as a breakout, pullback, and then a continuation candle. It broke out, pulled back, and closed lower than the monthly. Then we didn't see price actually finding support to move higher again, and subsequently this now constitutes to a tweezer top at a resistance level, and what's happened recently is prices have fallen back. So now it's still below the monthly fib, and it's now tackling the daily fib over here at the 22.6 level. So if this is to be positive, to see another reattempt, we want to see, because we've got yesterday's candle was very indecisive. However, on the Asian session, we've seen a bit of buying against the Swiss franc for the US dollar. But as long as it maintains intraday above the 23.6, then we could see the US dollar reattempting the institution moving out, as well as the monthly fib quite soon. Failure to do so, and she closes lower than that, then she's obviously going to be trading into the weekly fib over here. Quite a tight range, and if I go down to my 4 hour time frame, you'll see exactly what I'm talking about. So let's bring it over. Swing low, swing low, swing low. Okay, so if she's making swing lows, then she's in a intermediate negative trend. Okay, so there we go. I'll put that on here so you guys can see price is testing that level as we speak. You'll notice that price has spent more time above the institution since the latter part of August, which is a positive sign. Okay, we got the last arrow is red on our 4 hour, and candlesticks are red. However, you'll notice that the RMO is below, the MACD is below, but we didn't get a close lower than the institution. If that 4 hour candle closed lower, then you had a genuine selling indicator. However, that's not been the case, because as price has been moving lower here, you can quite clearly see that's there. You can see this low, which is lower than that one. You can see the MACD is clearly above it. So we're seeing a tapering. Okay, We've got convergence as we head into the institution moving average as well as the weekly fib. So as long as she finds support over here, then there's likely to be a bigger bounce. The 4-hour candle, as we speak over here in play, we have a blue arrow, and the candle is blue. However, the candle has got another 48 minutes to go until this 4-hour candle closes. If this 4-hour candle closes bullish, then we should be looking back towards the 38.2, back towards our monthly high here at the monthly fib retracement level as our first target. If she closes lower and she ends up looking like a shooting star or something like that, then we should look for potential price to pull back towards the 23.6 because that's an exhaustion candle at a price support and resistance level. Okay, so just be aware of that, guys. Last pair, the US dollar Japanese yen on a daily. Here again, prices, the US dollar has been quite aggressive against the yen, and on 2 separate occasions when prices actually fell, the US dollar fell against the yen, she was actually supported by the institution moving average. So you can see quite clearly the long-term sentiment, even though this pair has been ranging, because it's above the institution moving average, it's still positive. Swing high, swing high. However, on the bounce just recently, prices moved into their monthly fib retracement here and failed on a number of occasions to actually break and close higher. We had a breakout, but the pullback didn't close higher. Breakout, pullback didn't close higher. Breakout, pullback didn't close higher. And this particular one over here smacks of a shooting star at a resistance level. It can be, but you can see quite clearly yesterday we saw a lot of selling for the US dollar against the yen intraday. However, by the close of play, we had some favorable news for the US market, and subsequently price pulled all the way back and moved and closed just at the underside of the 61.8 on our daily, but also the 50% on our monthly fib, the blue line. So we have a very strong resistance level here. Clearly on this particular one, you see we had a breakout, pullback, and then a continuation higher. That worked very, very well. Here, breakout, pullback, and didn't support. Breakout, pullback, didn't support. So we had a tweezer top here and prices are really low. So it's imperative that when we do get a breakout, we do need to see a support candle. Yeah, for example, and your RMO is going to be above as well as your MACD indicator. Here we have RMO above. MACD has been above as prices have been moving higher recently. You can see quite clearly that the MACD has been above, okay, which is a good sign. However, we are trading at a physical major support and resistance level, a very strong resistance level. You can see 1, 2, 3, 4, 5, 6, 7, a full week of resistance at this level. Okay, the overall sentiment is very much positive. Our MACD and RMO is very much blue, so it tells us that we're on a strong uptrend. The R squared is complementing most of the time frames, so selling is positive upside. However, the hurdle we have at the moment is this monthly fib here at this 50%, as well as a daily 61.8 level, just below the 100 mark. Got to get above that, guys. So I'm not trading the US dollar Japanese yen until I get a physical, nice, bullish engulfing candle that will take us above all of this. You can see on the 4-hour, get above all this, and then I'll start looking to potentially look at the current high, which is one above here. So we get a break above here, looking to the current high, there's a good old 65 pips and change on that. However, we want to see a candle close higher than that. 4-hour time frame, you can see red arrow, candles are still blue. RMO is still above the 0 line, the MACD is clearly below, but the RMO, the trend RMO related indicator, is still above the 0. If the RMO line closes lower and we're still below the monthly fib as well as the weekly fib, and the MACD and this OSMA level stays still below the 0, then it gives me a viable reason to start looking to trade long-term short or back towards the institution moving average. Okay, you can quite clearly see here, for example, sell, blue candles, RMO above. We did see selling, but it only sold aggressively into our fib level here at the 50% retracement on our daily. Here again, sold, but didn't even get to our 50%. So you don't want to be selling very aggressively into the prior levels if you're still in a very strong uptrend, okay, because you're more likely to put more risk on the table and you're getting a very little return. Okay, we don't want to do that. We want to obviously be trading with market sentiment, so wait for confirmed move with the institutional traders. Get a close and break higher, or bearish engulfing candle with red, and then you start looking for targets. Okay, guys, that's it, short and sweet. Hope you have a fantastic weekend with family and friends. It's Friday the 13th. Strange things happen on Friday the 13th, but we have a lot of news out for the US market this afternoon. Core retail sales and month figures, very, very important. They're expecting a slight contraction on that figure. We have the PPI inflation month-to-month figures. They're expecting a 0.2% increase from 0. The retail sales and month figures, they're expecting a positive 0.3% rise. Core PPI month-to-month figures, they're expecting a 0.1% increase in that inflation report. So, and then we have the prelim consumer sentiment figures, guys. They're expecting a slight higher. There was 82.1. They're expecting, sorry, yeah, it was 82.1 before. Now expecting 82.6. So they're expecting a 0.55 improvement. So if any of that news comes out negative, when they're expecting a bit of positive, we're going to see the US dollar take a bit of a hit. If it comes out in favor of the US dollar, then you're going to find all its cross pairs, euro, sterling, etc., are going to feel are going to take the hit themselves. Okay, so just be aware, we are end of week, so a lot of people are going to be taking profit if they have been in trades all week. So by the end of this evening, we could see pullbacks, whether they are buying or selling pullbacks, as people take profit heading into that weekend. Otherwise, I'm going to leave you to it. Have a fantastic trading day, even better weekend with family and friends. I will catch you guys on Monday morning, nice and early, for the following week. But until then, you guys have a fantastic day and trade serenely.